Okay, so we're looking at understanding the bank reconciliation statement. All right. With this method, this we're using the method where you start with the balance of the amended cash book. Okay. Yes. So any uncredited checks, it means this is money that has come in, but the bank is not aware of. All right. And any uncredited checks, this is yeah, uncredited money that has come in, the bank wasn't aware of it. Okay, you received the payment by check, you recorded in your cash book, but the bank is not aware of it because you haven't taken the check to the bank. That's uncredited check or a lodgement. Then unpresented checks, these are payments that you have made, okay, but the bank is not aware of it. You made the payment by check from your business and you recorded it in your cash book. Probably the person you gave the check hasn't taken it to their bank, so your bank also won't be aware that a transaction has occurred. Okay. So actually, we're supposed to be using method one, not method two. So yes, this method here. Method two, this one which I've put here, where you start with the balance for the cash book. It means you're working backwards. Okay. So I think first understand method one before we go to method two. Okay. Method one is where we start with the balance as the balance the bank statement has given us. Okay. So let me give an example here. So here they say they'll give you balance as per bank statement is 80,000 kwacha. Okay. So that's the first thing you put here. Balance as per bank statement 80,000 kwacha. Okay. And this is the balance that came when your bank statement was given to you. Okay. After you put in the balance as per bank statement, then you add any uncredited checks, meaning checks which the business prepared and what's it? Oh, checks which the business received and the bank wasn't aware of. Okay, so uncredited checks, we're going to add them. Okay, that's why I've left it as a positive value because uncredited checks, all lodgements, okay, is money coming in. That's why we will need to add the uncredited checks. Okay. Then we're going to subtract the unpresented checks. This is the payments which the business is aware of and the bank is not aware of. Okay, so it's represented as a negative number because an unpresented or an outstanding. Sometimes you hear outstanding check or unpresented. Just remember it means a payment. Okay. So when we use this method, it's just that I haven't connected this question with cash book. When you use this method, after you do your tabulations, the balance that you need to arrive at is the balance of the amended cash book. Okay, because bank reconciliation, the bank statement and the cash book, the balances have to be equal. Okay. So when you start with the balance of the bank statement, you need to end with the balance of the amended cash book. Okay. So now here we don't have any amended cash book, so we'll just get this balance regardless. So 80,000 plus 90,000 minus 13,000. Okay, minus 13,000, which is the unpresented checks. You get 157,000. Okay. So When you're using this method where you start with the balance of the bank statement, your ending balance should be the same as the balance of the amended cash book. Okay. Yes. There's also another method, as you've seen this one, which I already put earlier on. Now, this method works in reverse. Okay. It works in reverse. Okay. Here you have to start with the balance of the amended cash book. Okay. So in this case, let's just use this 157,000 that we've got. 157,000. Okay. So when you start with the balance for the amended cash book, you have to arrive at the balance of the bank statement. Now, with this method, as I said, you are working in reverse. Okay. So any uncredited checks, you need to subtract them. Okay. So here, the uncredited checks, which is money coming in, you need to reverse that by subtracting. Okay. And any unpresented checks, which are the payments, you need to add them. As I said, here you are working in reverse. Okay. That's why I always advise understand this one first before you understand this second method. Okay. And the second method, we're working in reverse. Okay. So the uncredited checks, you will subtract them. Okay. And the unpresented checks, you add them because you are working backwards. Okay. You are working backwards. Okay. So here, 157,000 minus 90,000 plus 13,000 get back to the balance of the bank statement. Okay. So these are the two methods of the bank reconciliation statement. Okay. So for today, I would advise understand this first method here, where you start with the balance of the bank statement. Then you add uncredited checks because uncredited checks or lodgements are money coming in, and you subtract unpresented checks, which is money going out, which are payments, so that you arrive with the balance of the amended cash book.